Hello and welcome to this episode of InFocus. I'm Candis Fitch, Portfolio Manager at TriCert Investment Counsel, joined today by fellow Portfolio Manager Grayson Waechter. Good to chat with you today, Grayson.
Always a pleasure, Candis.
A quick reminder to our listeners that our resource sector includes both materials and energy. I know last time we chatted a bit about the reallocation of pipelines to the energy sector, so just wanted to give people a quick update on that. But as we near the end of earnings season and the end of the year, can you give us a bit of a recap on how earnings went for the sector?
Yeah, so earnings for energy, just to give our viewers a little bit of context, year over year, oil was down about 8.1%, and natural gas was up about 13% in North America. And what we saw when we were looking at energy, for all our oil producers, except for Chevron, who had completed their acquisitions, so those quarters are always a little choppy. We saw earnings anywhere from down from about 3% to 0%. So what we've seen is these companies taking an opportunity during this period of time, instead of going out and spending like crazy, but really looking at their operations and seeing how they can increase their margins. So even though we have a year where oil is down, we end up seeing some very actual promising things on their balance sheet, which is great. It just allows them to strengthen their share buybacks and their dividends even more in all environments.
Wonderful. And what about the materials side of things?
So the materials side, a couple of notes on that one. Potash has actually been a bit of a highlight that we saw earnings wise. They came in quite strong for Nutrien. It's up about 21%, and that's on the Canadian side of things. There was a lot of questions as to tariffs and what was going to be applied in a 10% as well. I would say prices on the U.S. side, they're up about 27%, but on Canada, up about 21, and that's really strong. There was a couple events that were kind of critical to that price going on. We've talked a couple times in the past, but BHP has one of their largest potash mines coming online. It's supposed to come online end of next year, early 2027. That's been delayed by a year. So for us, that's a really strong boost for a company like Nutrien, as well as they gave some language on their mines coming in two stages. The second stage is going to be delayed even more. So we see basically strong pricing that's translated right to the commodity for potash. So that's been quite good. Copper's done relatively well as well. It's been up about 7%, or under that for the year. So materials side has come in is very well. It's been a strong quarter.
Perfect. Now let's continue on chatting about materials for a second, because I know there's been some news headlines about merger and acquisition talk. Can you dive a little bit deeper into what's been going on there in some of those materials companies?
Yeah, absolutely. So the first big news announcement that we got, and this was a little, it wasn't unexpected, but it was a little bit of a surprise with the people that are involved. So Teck Resources and a company from the UK called Anglo American are proposed merger of equals. Essentially, our Teck shareholders received 1.33 shares of the new company. And essentially, if we look at what that translates today on the actual current price of Teck as it closed of yesterday, it's about an upside of about 8.4%. So there's a couple of reasons that this is interesting. The first one is the new company is going to be one of the top 5 global producers of copper in the world. So I know, Candice, you meet with clients a lot. It wasn't only a few years ago that copper was on the mind of most clients with electrification going on.
Absolutely.
And so the new company is going to be about 70% copper. Teck right now is about 60 to 65. And then the other thing that makes this an interesting transaction is the other minerals that they're producing is mainly just zinc. So what they're going to do in the new company is it's going to be comprised of zinc and iron ore. So when we look at this, is this good for our clients? From a copper standpoint, there's going to be more mines that the new company will own that will spread the risk and operational risk out, as well as a whole new commodity of iron ore that's going to basically help spread and smooth out some of the fluctuations that we do see in some of the commodities. So if something does happen to zinc, you've got some iron ore that can do some of the heavy lifting for you as well.
Gotcha. So would you say then looks like a positive transaction for people who hold Teck Resources?
Yeah, absolutely. It's something that so the vote's going to be I believe around December the 9th, and it's something that we're going to vote positive on just from a review of the information, and something we hope does go through. It's far from a done deal. They're in conversations with the government on, where are the headquarters, how many jobs are going to be in Canada versus the UK. From a tax perspective of our clients, the UK doesn't withhold anything on dividends, so that's a plus for us. We don't have to worry about any foreign taxes as part of that transaction. So it'll be interesting to see what concessions they can make to the Canadian government to see if they can get it over the line. One of the reasons we are really pro a merger with a company like Anglo American is we like the profile of what they have. They're going to be doing some divestitures, but the end company result we like. And the other reason is the other shark in the water that we were expecting to try to buy Teck up because they had in the past was Glencore. When we look at a merger with a company like that, they had recently bought all of Teck Resources coal assets, which we were fine getting rid of. They're profitable at the time. Coal is at an all-time high, but I don't think it's something that the average client really wants to hold in the portfolio. It's not we're not taking a ton of questions of, let's get into coal, from clients either. So it was a way to essentially have two companies that were potential targets for Glencore be able to merge, and essentially they're now big enough that we don't have to worry about something like that. And what the most likely potential in the future coming in is one of the top tier mining companies like your BHPs, your Totals, or your Valley, potentially wanting to add a lot of copper into the portfolio. And this would be a way for them to do that. So we like the company and we like the growth prospects of the company by itself, but you always have that upside potential if somebody does decide to purchase them, which we're seeing right now with this transaction and essentially having another 8.4% upside potential if it does go through for our clients.
Great. Now, I know there was a bit of news as well on the Camco side of things. Can you chat with us on that as well?
Yes. So, Westinghouse, which is a company that Campco owns 49% of, entered in a deal with the U.S. government. And if you can think back to 2008, when the U.S. government was taking positions, even just through preferred shares of some of the big banks, and how much of an outrage that was, this thing didn't really get any huge headlines on this. But essentially, what they're doing is they've struck a deal with the U.S. that the U.S. will receive 20% of any distributions in excess of $17.5 billion if two things happen. The first one, if the U.S. is able to enter definitive agreements to essentially purchase reactors, and the total value of that deal needs to be above $80 billion. So that's a huge boon to the nuclear industry. And then the second one is that the company would need to basically have an IPO, or at least start the process of an IPO, and be valued more than $30 billion as well. So if we think about when Camco originally made their investment for the 49% of Westinghouse, they paid a little over $2.1 billion American. And now we're talking about 49% less U.S. government's cut of a company potentially of $30 billion. So the great thing that we're seeing is this $80 billion being used to purchase reactors. It'll most likely be about 8 reactors, give or take. And we've seen the price of the stock as well as the price of uranium react very positively to that announcement. So Camco is something that we do hold in some clients' portfolios, and we're definitely watching. So far, it's been really good news and a really great quarter for a company like that.
Perfect. Well, thanks so much, Grayson, for all the insights on the resource sector. As always, if anybody has any questions on today's topic, you can reach out to your TriCert Investment Counsel portfolio manager or your financial advisor at your accounting firm. Take care.